And we are not doing the pilot paper, we are doing the real paper. The one that was done on 16th of December 2021. K and L were sole traders manufacturing solar equipment. Can you identify sole traders? Good. On that 1st of October 2020, they amalgamated. Can you identify the date? So to amalgamate is to merge. So they merged. So on that 1st of October 2020, they amalgamated and traded as partners, sharing profit and losses in the ratio of 3:2 respectively. Can you identify profit and loss sharing ratio? 1 year later, and then 1 year later. Okay. 1 year later, on that 1st of October 2021, they converted the partnership into a limited liability company called Kiro Limited. So that means they were sole traders. Then they decided to amalgamate, to merge, and now they act as partners. Then 1 year after, they decided to convert their their partnership into a limited company. No adjustment have been made to record the amalgamation and conversion, but the summary statement of financial position for the sole traders as at 31st of October 2020 and the partnership as at 31st of October 2021 was follows. So we have the assets for the sole traders for K and L, and then that's the date of amalgamation. And then we have the partnership statement. That's at the date of conversion. We have the assets and the liability. Now, if you take the assets minus liability, what do you get? Net asset, correct. Can you write that as a net asset? So you have pale chini, assets minus liability. The assets minus liability. For example, okay, it's 28,400, L is 22,600, and then for partnership is 57,400. That's what we call the net asset stroke capital. Can you write it as capital? And can you be attentive? Be attentive. I don't want to repeat the statement twice. Because if you don't listen this well, there is nothing you understand. That's why I'm trying to prepare you mentally by telling you to underline everything that I know I'll be asking you. Additional information. On 1st of April 2020, now 1st April 2020 is the day they amalgamated. The partners agreed to take up the assets and liability of the individual traders at book value, except for freehold property, plant and equipment, and fixtures and fittings, which were to be revalued as follows. So there is revaluation on amalgamation. Revaluation on amalgamation. So the two sole traders amalgamated, that is K and L. We want to determine whether they revalued the asset at a gain or loss. So they revalued three assets. Number one is the freehold property. Then we have plant and equipment. And then we have furnitures and fittings. And now let's go to the financial statement for K and L at the date of amalgamation. Now, how much is the value of the property? Freehold property for K? 6,000. And that's good note number one. It was evaluated to 8. Is it again or loss? Again by 2,000. L, how much was the carrying amount? 4,000. Note number one. It was revalued to 6. That's a revaluation gain by how much? 2,000. Plant and equipment, how much was the carrying amount? 27,200. Then it was revalued to 26. That's a loss, right? A loss by how much? 1,200. What about for L? The carrying amount was an amount of 22,400. Was revalued to 22. Gain or loss? A loss by how much? 400. Last three furnitures and fittings. How much was the carrying amount? 64, which was revalued to 6. That's a loss by how much? 400. L, So 60? 62 was divided to 6. Around by how much? 200. So now give me the change. 16, is it 400? And 6, is it 1400? Good. So that means at the date of amalgamation, K, there is a revaluation gain attributable of 400, L 1400. Now that gain will increase the value, will increase the amount claimable by K by 400, L by 1400. Number 2, during the year ended 31st of October 2021, K made drawings of 95,60,000 while L withdrew 24,40,000. Those were the drawings during the year when they acted as partners. The partnership was converted into a limited company on the following terms. Remember, they converted after 1 year, after amalgamation. So it was converted under the following terms. 1, freehold property and account receivable were revalued to 24 million and 22.68 million respectively. So there is a revaluation on conversion. Now, when they were converting, now they acted as partners and they revalued 2 items. One was the freehold property, also receivables. So freehold property was revalued to how much? Not number 3, but is it 24? Yes. And then receivables revalued to 680. Yeah? You minus. Remember, this is revaluation on conversion. So therefore, you look at the financial statement at the date of conversion. So you compare against that. So we have partnership statement of financial position as at 31st of October 2021. The value of the freehold property was an amount of how much? 16. So 16, but was divided to 24. So that's again by how much? 8,000. Receivables was an amount of, is it 25,680? Then was divided to 22,680. Gain or loss? Loss. A loss by how much? That's 3,000, right? This is a loss. So how much was the net? 5,000. Now this 5,000, it's a gain on conversion. They acted as partners. So now this gain will be shared among the partners. How are they sharing profit and losses? 3:2. Good. Not number 3, the second bullet. M and L were to receive 15% unsecured debenture at par, so as to provide each partner with income equivalent to 6% return on capital employed based on the capital balance as at 31st of October 2021. That is after accounting for the profit, drawings, and revaluation in bullet 1 above. Number 3, Kilo Limited, now that's the new company, authorized share capital was made up of 600,000 ordinary share of 50 each, out of which 520,000 shares were to be issued to partners in their profit sharing ratio. So, issue of ordinary shares to partners. The partners were given ordinary share. So the company should have how many shares? Not 600. The 600 is what we call the authorized share capital altogether. But the authorized does not mean issued. They issued how many? They issued 520. So it's 520,000 share. Each at how much? 50. You get an amount of 26,000, which was to be shared using which ratio? Yeah, was to be issued to partners in their profit sharing ratio. So K, what is the profit and loss sharing ratio? 3:2. So it will be 3/5, 2/5 of 26 million, 26 million. So that means K got shares for how much? 15,600. L? 10,400. Good. Last bullet. Any balance in partners' capital account were to be settled in cash. Required. A computation showing the value of debenture and ordinary share to be issued to the partners. So already have the issue of debenture, shares. So now we need the value of the debentures. Can we go back to note number 3, the second bullet? Note number 3, the second bullet. K and L were to receive 15% unsecured debenture at par, so as to provide each partner with income equivalent to 6% return on capital employed. So we just need, first of all, to get the value of capital employed. Balances as at 31st of October 2021. That is after accounting for profits. Can you align profits? The drawings and revaluation in bullet 1 above. We have drawings, we have revaluation. Do we have the profit? We don't have the profit, but you have been told that they amalgamated. After amalgamation, after 1 year, they converted. Now the question is, for that 1 year, they traded as partners. How much was the profit? Now, in this case, you're not given the income statement. You need to compute. How do you determine that? So, determination of profit. Now, let me take you back. In case of a sole proprietorship or in case of a partnership, how do you get the capital? Adjusted capital. It's very simple. So, we did a question recently on David Wekesa on an agriculture, right? We also did S&L, advocate. How are you determining the capital? Capital balance brought down plus profit plus what? Minus what? Drawing. So I think that to get the capital balance carried down, I think that you take the capital balance brought down, then you add the profit, then you deduct the drawings. Remember, objective is to get the profit. But in this case also, there is something we need to add, because at the date of amalgamation, they revalued some asset and there was a revaluation gain. Now, revaluation gain is part of the profit, or it's a part of the gain. So what you have to do now, you take the balance, capital balance brought down, you add the profit, also you add the revaluation gain. It's there well. So revaluation gain, now before you deduct the drawings. We have the drawings, we have revaluation, we have capital balance brought down, we also have the capital balance carried down. So what we need is the profit. Can you go to make the profit the subject? So to get the profit, you take all this to the other side. So you'll take the capital balance carried down, then this one goes to the other side, it will be positive. You add what? Drawings, then you deduct the capital balance brought down. You also deduct what? Revaluation. Simple. So we do that. Determination of profit for the year. So I say that you take the capital balance carried down. Now, carried down is the date of conversion. Are you together? Balance brought down is at the beginning of the year or beginning of the period. Beginning of the period is when they amalgamated. So therefore, capital balance carried down is for the partnership. So given the partnership financial statement, that was as at 31st of October 2021. Can you see that? Which was an amount of 57,400. Then you add drawings. Note number 2. Note number 2, we are given the drawings for the year. That during the year ended that 1st of October 2021, K made drawings of 9516 and L 2440. So how much is the drawings for the year? 12,000. Then you deduct capital balance brought at the date of amalgamation. They acted as sole traders. So now let's go back to the statement of financial position. We have the net asset for K was an amount of 28,400. Now that was as 1st of October 2020. Then you add for L, which was an amount of 22. Yeah, those were the capital at the beginning of the year. So you get 51,000, eh? Then you deduct at the date of amalgamation. So above this capital, they revalued the asset. So if they value the asset which was not captured here, that means this asset has been understated. So there was an element of revaluation. So you raise revaluation and not revaluation on conversion. Are you together? We are converting at the end. So we want now revaluation on amalgamation. So revaluation on amalgamation. K was an amount of 400. This was an amount of 14. So the total was an amount of 18. So during the year, did they operate at a profit or loss? Profit. Profit of how much? 16? 16,600. So they operated at a profit. So now once we have the profit, now we can answer what they want. So now we determine the adjusted capital on conversion. So what we should debenture to K and L. Let's read the third time, that point. Note number 3, the third bullet. The second bullet, sorry. K and L were to receive 15% unsecured debenture at par, so as to provide each partner with an income equivalent to 6% return on capital employed, based on the capital balance as at 31st of October 2021. So that's what we need to determine. We determine the capital as at the date of conversion. How much is the adjusted capital? That is, after accounting for profits, we have computed our profit, our drawings, and revaluation in bullet 1. Bullet 1 was revaluation on conversion. So how do you determine that? We use this formula. To get the capital balance carried down, you take the capital balance brought down, you add the profit, you add revaluations, you deduct what? Drawings. So we are saying that here you take the capital balance brought down, you add the profit, you add the revaluation, but here we have two revaluation now on amalgamation, as well as on conversion. And then you deduct drawings. And that's how we get our adjusted capital. K, remember using debenture to each. So we compute for K and L. How much was the claim at the rate of conversion? Now, how much was the capital balance brought down for K? 28,400. And L was an amount of? Yeah, 22,600. And then you add the profit. Now, this was the profit. How are they sharing? 2 or 3 is to 2? 3 is to 2. Now, let's share that. 16,600 in ratio of 3 is to 2. Sorry? 9960 L 6640. And then you add the revaluation. Revaluation will increase their claim. There was revaluation on amalgamation, K 400, L 1400. Then there was on conversion. They converted when they acted as partners. So that means this 5,000 will be shared in the ratio of 3 is to 2. Is it 3,000, 2,000? Can you confirm? Yeah, this one we don't apply because this one for individual sole proprietor. But this gain you share in the ratio of 3 is to 2. Then you deduct the drawings. Note number 2. Note number 2. K during the year made the drawings worth 95, 9560. L made drawings worth 24, 40. So that means how much was their net claim at the reporting date or at the date of conversion? Which one? Okay. So that's 200. Sorry? That is 200. So we need a return on capital employed so that we get 15% debenture. Let's read the fifth time, the same point. Number 3, bullet 2. K and L were to receive 15% unsecured debenture at par, so as to provide each partner with income equivalent to 6% return on capital employed. So return on capital employed, 6%. Now give me 6% of this, so that 200, and then for L, that 200. 19, that 2, L, 1812. So now you want to determine the value of the debenture. In that, if you take 15% of the value of the debenture, should give you an interest equivalent 19.2 and 18.12. That's what it means. Okay, let's read the sixth time. K and L were to receive 15% unsecured debenture at par, so as to provide each partner with income equivalent to 6% of the return on capital employed. So now, how much will be the value of the debenture? So in this case, this is what we'll do. If this is the return you need from 15% debenture, so you'll take 19.2, you divide by 15%. Here you'll take 1812, you divide by 0.15. How much is that? You're getting an amount of? 1288. 880. 12.0. We can do a trial. Can you take 15% of 12,880? 15% of 12,880. Do you get 19.2?
Yes.
Yes. Okay, what it means, what I have divided by 0.5. This 19.2, this will be equivalent to 15%, or about 100%. You cross multiply, and that's what I've done by dividing by 15. Part B of the question. So we have answered number 1. Number 1 required a computation showing the value of the debenture and ordinary share to be issued to the partners. Number 2, partners capital account as at 31st of October 2021. Partners capital account. So how do we prepare the partners capital account? So how many partners do we have? 2. Okay. So you start with the capital balance brought down. How much is the capital for K? 28. So you have everything here. Just look what's here. 28,400. L was an amount of 22. Then you add the profit. They made the profit during the year. To K was an amount of 99,60, 66,40. Then there was a revaluation gain. That one will increase their claim on amalgamation as well as on conversion. On amalgamation, K is 400. Here we have is 1,400. On conversion, it's 3,000 and 2,000. So that means at the date of conversion, how much was their claim for each partner? The gross claim, not the net claim. For L, that's 2,640. What 17? Now that was their gross claim. Then you deduct what reduces their claim. Number 1 is in case they made any drawings, and they made drawings. 95,60, 24, 40. Now once you have that, the balance. Now the net claim. How was it settled? Number 1, it was settled through the issue of ordinary shares, and these were the shares. Ordinary share to partner. They got shares worth 15,600, 10,400. Also, they have been given a debenture, 15% debenture. 15% debenture to K, it's an amount of 12,880, 12,0. So now give me the balancing figure. 41,760, that 2,640. L 77 20. That's 7. That's 720. What is this? Purchase? Nothing like that. You see the purchase consideration, there is ordinary share together. It's part of purchase consideration because that was the were paid. Also, there is debenture. Can you read the last note? Note number 3, the last bullet. Any balance in the partner's capital account what to be settled in? Cash. So if you want to determine the purchase consideration, is the total of ordinary share, they were given debenture, and then they also given paid in cash. Let's take a screenshot. So now let's answer part C. Just. Part C, you have to prepare the statement of financial position of Kiro Limited as at 31st of October 2021 after completing the above transaction on conversion. So Kiro Limited. So we are converting the partnership. So therefore, we factor in the asset of the partnership. Now let's go to the balance sheet. But for the partnership, so you have freehold property, an amount of 24,000. 24 or 16? Correct. Can you go back to note number 3, the first bullet? The freehold property and account receivable were revalued to 24 and 22. 680. Good. We have planted equipment. Planted equipment is an amount of 52,000, right? Then there is fixtures and fittings, which is an amount of 12,000. And then current assets. Current assets, we have inventory. Inventory is an amount of 13,400. Then we have account receivables. Account receivables revalued, right? So take the revalued amount. It was revalued to 22,680. Then we have cash at bank. So for the cash at bank, how much do you have? 500, right? So you can decide to put 500 or you ignore it. Because so you can see there is bank overdraft. You see, now, this is what I want to explain. The balance in the partner's capital account was paid in cash. Now, how much do you have in cash? 500. And you have to pay an amount of that 720, L an amount of 77. So if you pay them, will you have any cash? No, you'll be having bank overdraft. So give me the total assets. $124? 124,080. Equity and liabilities. So for the equity, we have the ordinary share capital. How much is the ordinary share capital? It was 520, each at 50. Was it 26? Or you can take 15,600 minus 10,600. The company issued 520 shares each at 50. You're getting an amount of 26,000. Then we have a non-current liability. We have 15% debentures. So 12,880 to L, no, to K, and 12,080, you get an amount of 24,960. Then we have the current liabilities. To the current liability, we go back to the statement of financial position. There was account payables, which was an amount of that 9,680. Then we have bank OD. For the bank overdraft, there is an amount of 22,500, which is negative, right? We eliminate cash of 500, then we add more liabilities. Are you understanding that? No. Let me prepare for you cash at bank account. You might understand this. So how much was the cash at bank? We had an amount of 500. Then also we had bank OD, bank overdraft, which was an amount of 22,500. That's an overdraft, it's a liability. Then URES, we paid partners through cash. So partners, so we are told that the balance was to be paid in cash. So that's 720 and then 7720. A total of how much? 11? 440. It's an outflow. So how much will be a total bank OD? You take 500, you minus. So you have a negative balance. Now that negative is what we call the bank overdraft. You get an amount of 20. Sorry, 30. 33? 440. So bank OD, 33,440. Let's try to harmonize that. 124. 08 or 08?
08.
Good. Can take a screenshot. May 2021. Question 4. And before you do that question, write an assignment. Assignment. December 2020. December 2020. Question number. Question number 4. Question number 4. You can open it. Open it first. November 2020, question 4. Sorry? November 2019. 2020. November 2020. Question 4. Mika and Mira had been operating as sole traders. On 30th of September 2018, they amalgamated and traded as partners under the name Minara Traders, sharing profit and losses in the ratio of 4:1 respectively. 1 year later, on 30th of September 2019, they converted the partnership into a limited liability company trading as MN Limited. No adjustment have been made to record the amalgamation and conversion, but the statement of financial position for the sole traders as at 30th of September 2018 and partnership as at 30th of September 2019 was follows. So you have assets and liability, and you have their net assets. Number 1, on 1st of October 2018, the partners agreed to take up the assets and liability of the individual traders at book value, except for freehold property, plant and equipment, and fixtures and fittings, which were to be revalued as follows. Number 2, during the year ended 30th of September 2019, Mika made drawings of 4780 while needed due to 1220. 3, the partnership was converted into a limited company, MN, on the following terms. The freehold property and account receivable are to be revalued to 12 million and 11,340. So in our case was double, so they just multiplied by 2. Mika and Mira were to receive 15% unsecured debenture at par, so as to provide each partner with income equivalent to 6% return on capital employed based on the capital balances as at 30th of September 2019. And that is of accounting for profit, drawings, and revaluation in note 1 above. MN Limited overall share capital was made up of 150,000 ordinary share of 100 each, out of which 130 shares were to be issued to the partners in their profit sharing ratio. Any balance in partners' capital account were to be settled in cash. Yeah, so it was repeated after 2 sittings. And there is someone who listened to this question, na akakopi hata akupiga picha akakopi. And the question came and they told the same question. Because the question will be repeated what has already been done in class. But now the problem with you is that now I have given you this assignment. You have copied as an assignment. But now you are thinking that, si tumefanya an example like that. You are not the one who have done. I'm the one who have done. So you can only master this concept. For example, if you do this question alone, it can take 2 hours. But once you do because it is a replica of the question we had done. Once that concept stick, you will not forget. But now saying that you have taken a photo here, that you don't go and try this, high chances after 2 days, the one we are done, you will not be remembering anything. And I've been advising you, kindly try, because after all this, what will happen? Two of the questions, they will come question we have done here in class. Two of the questions are replica. But you can a blue paper, mwanze kuogopa hapo. And then you see the paper was hard. Then someone tells you that, but the two questions you did in class, wapi? Open me 2021 question, bro. Yeah, it's upon you now to make the decision now. I was telling another group that the problem we face here mostly for my unit is because that we do spoon feed the students too much, and that's how they think now that's the way to go. I take a point, I read 5 times, I explain to them. In an exam, will I be there to explain for you? To go to point number 4. At I read for you, I explain. No, I'll not be there. So what we're doing here is spoon feeding, because not most of you are consistent in doing the assignment. You're only here to take the notes. You take the notes, you go home. Take the notes, go home. In an exam, you'll be around. So now let's do me 21 question 4. Abel, Benta, and Chare have been trading in partnership business under the name ABC Enterprise. They decided to convert the partnership into a limited company, Umbrella Limited, as at 30th of November 2019. Can you underline the date? So we converted on 30th of November 2019. The partnership financial year ends on 31st of May, and the company will continue using the same year end date. The trial balance bureau showed the financial position of the partnership as at 31st of May 2020. Can you identify that date? So that means the reporting date is 31st of May 2020. But when we converted? 30th of November 2019. So how many months to the reporting date? Use your fingers. How many months? Kuna mtu amepata 5 hapa. Around 7. How many months are those? 6 months. So what does that mean? Now, since we're given the financial statement for the entire year, but we converted 6 months to the end of the year. So that means for the first 6 months of this financial year, they operated as partners. And then for the remaining 6 months, they operated as a company. I hope that I have understood that point. So we're given the financial statement where we have the capital current account, drawing in cash. We have the freehold property, motor vehicle, furniture, and fittings, accumulated depreciation. Inventory as at that 1st of May 2020, that's the closing stock. Cost of sales, admin expenses, selling and distribution, accounting and audit expenses, incorporation expenses, trade receivable and trade payable, repayment and accruals, loan from Benta. The Benta is one of the partners. So the partner give a loan to the business, which earns an interest of 10% per annum. And then we have the bank balance. Added information. Number 1. And the partners were sharing profit and losses equally. Can you add equally? Yeah, the partners were sharing profit and losses equally after allowing for annual salaries of 3 million for Abel and 2.2 million each for Benta and Chare. 2. The partners agreed on the following condition for conversion to a company. Assets to be revalued as follows. So given freehold property, furniture and fittings, and the motor vehicle. Goodwill to be valued at 27. So in this case, you don't have to complete the goodwill. You are given the goodwill we agreed on conversion, 27. Each partner to become a director of the company at the same salary at that previously allowed in the partnership. Then the loan is to be converted into share capital at par. That means upon conversion, the loan was converted into an equity. The shares are to be issued to each partner at par in respect of the amount of their equity holding as at 30th of November 2019. Number 3, sales during the second half of the year after conversion were 50% above that of the first half. However, the gross profit percentage remained the same throughout the year. 4, selling and distribution expenses were proportional to the sales for each period. All the expenses were incurred evenly throughout the year. 5, salary drawings were made evenly. Drawings made after incorporation were to be treated as director's salary. There are no purchases or sales on a current asset during the year. A depreciation is to be provided on cost per annum as follows. Number 7, no dividend are paid or proposed, but is decided to write off the incorporation expenses and 7 million of goodwill. Goodwill is treated as having arisen from the purchase of the business. So that means the goodwill arose as a result of conversion. Good. Required. Statement of profit or loss in columnar form, showing separately for ABC Enterprise, that's a partnership, and Abere Limited for the year ended 31st of May 2020. Before that, first of all, let's account for depreciation. Can you go to note number 6? Note number 6. There are no purchase or sale of non-current assets during the year. A depreciation is to be provided on cost per annum as follows. So you're given for the motor vehicle. Now, motor vehicle, we compute for the partnership and the company, furniture and fittings, partnership and company. So motor vehicle is at the rate of 20%, 20%. Furniture is 10%, 10%. Now let's go to the trial balance. How much is the value of the motor vehicle? 24, right? So you multiply by 24, but remember 20% is per annum. So it operated as partnership for 6 months. So you multiply by 6/12 so that you get the depreciation before conversion. 48/24, is that 2400? We do the same for furniture and fittings. 10%, how much was the cost of furniture and fittings? It was an amount of 12,000. Then it operated as partnership for 6 months, 6/12. You get an amount of 600. What about for the company? Now, for the company, let's go to note number 2. Upon conversion, we revalued the asset. Number 2, I told that the first bullet, assets to be revalued as follows. So I want us motor vehicle. Motor vehicle is revalued to how much? 24, right? 24, but now 6 months to the end of the year, 6/12, you get an amount of 24. Then we also revalued furniture and fittings at the date of conversion. Furniture and fittings was converted to how much? I was about to 48, but the rate is per annum, so operated as company for 6 months. You get 240. Then at the date of conversion, we revalued the assets. We want to determine whether there was a gain or loss. Revaluation of assets. Note number 2, bullet 1. Assets are to be valued as follows. So number 1, there is freehold property. Freehold property, which was valued to 54,000. Then furniture and fittings, which was valued to 48, and then motor vehicle, which was valued to 24. So how do you determine whether it's a gain or loss? You compare the revalued amount against the net book value. Now, freehold property is not depreciable because you are not given its depreciation, right? So how much is the carrying amount? You go to the trial balance. Yeah, the carrying amount was 51. 51,600, but was revalued to 54. Again, or else? Again, by how much? 2,400. Furniture and fittings. Now, this one is a depreciable item. Let's go back to the trial balance. How much is the cost of furniture and fittings? Is it 12,000? Then you raise the accumulated depreciation. In the trial balance, we are given that. Can you see accumulated depreciation? On furniture was an amount of 72. Then you deduct. There was depreciation charged for the year for the first 6 months before conversion. Remember, this being the financial year, this is the date we converted. So this depreciation you have 72 was at the end of that financial year. But this period, there is depreciation charge. So for the furniture and fittings, for the partnership, they are depreciated by how much? So that means at the date of conversion, how much was the net book value? 40? 4,200. Then it was revalued to 48. How much was the revaluation gain? Again by 600. I will do the same for the motor vehicle. How much was the cost of the motor vehicle? 24,000. How much was the accumulated depreciation at the beginning of the year? Still was an amount of? And then you deduct the depreciation for the first 6 months before conversion. For the motor vehicle, for the partnership, was an amount of 24. So that means at the date of conversion, how much was the net book value? 14? 400. Then it was revalued to 24. Again, how much? 90? 9,600. So give me the total in. Well, yeah, 12,600. And that was revaluation at the date of conversion. So this being a gain, it will increase their claim. And they'll share. How are they sharing profit and losses? Equally, correct. So now with that, we can prepare a financial statement. Required statement of profit or loss, that's the income statement, in a columnar form, showing separate for ABC Enterprise and Abere Limited for the year ended 31st of May 2021. So we prepare the income statement. For the year ended 31st of May 2020. So number one is here for ABC Enterprise. And then Abere Limited. And then we can be able to get the total. So for the first 6 months of the financial year, 6 months, we start with the sales. How much of the sales? Is it 120? Note number 3. The sales during the second half of the year after conversion were 50% above that of first half. So can you give me the ratio of sales? How is your portion that? 60? 60. 1:2. 1:2. Someone has said 60. 60 goes to the partnership or company. Sasa unaona msipoelewa hiyo hakuna kitu mnaelewa hapo. So 1 to 2, everyone should be having your own opinion. Okay, don't read the fifth time. It's very simple. The sales for the second half was 50% above. That's all. You don't have to read for another time. 1:1.5. 1:1.5. Another one. Second one, please. 0.5, 1 is to 2 is to 2, 2 is to 3. You see now this thing. I'm telling you that this is what you face in an exam. The sales during the second half was 50% above. So the first half is 100%, right? So the second half will be 150%. See, even you can do 0, 0. By 5? By 5? As simple as that. So it's 100 is to 150, which is equivalent to 2 is to 3. Now, can you approach on that? Two over 5 over 120? 48. 120 minus answer you get 72. And the total is an amount of 120. Sales and sales are always directly proportional. How much is the cost of the sale? Yeah, it was an amount of 6,800. So use the same ratio, 2 is to 3. What about for the company? At 6? For 80, and the total is 6,800. So now give me the gross profit. And candidates, hurry up, we don't have time. 23? 680? 520? And how much will be the total? 59? 200. Then you deduct, sorry? This one is how much? That 5. Then you deduct expenses. Now for other expenses, let's go to note number 4. Note number 4. In note number 4, you are told that the selling and distribution expenses were proportional to the sales for each period. All the expenses were incurred evenly. So apart from the selling, which were the same ratio as the sales, the rest accrued evenly. That means 6 months, 6 months. So now let's start with the one for selling and distribution. Selling and distribution expenses was an amount of 6,000. That one is the ratio of 2 is to 3. Sorry? 24. This one will be an amount of 30. Therefore, that means all the other expenses were incurred evenly. So 6 over 12, 6 over 12. Now let's go to the 12 balance. Which expense can you see? There is admin expense. Admin expense is 6. So it will be an amount of 3,000. No, it's 12. So if it's 12, that means it will be 6,000. 6,000, you get an amount of 12,000. And then there is accounting and auditing. Accounting expenses was an amount of 1,200, and the total is 2,400. And then there is incorporation expenses, an amount of, very wrong, 1,200. And the full incorporation expenses, what were we incorporating? A company together. And we say that incorporation expenses are what we call the preliminary expense. And we say that they should be done what? Capitalized. But in this case, we don't capitalize because I was very keen when we were reading number 7. Can you go back note number 7? No dividend are paid or proposed, but it's decided to write off the incorporation expense. Write off, that means you expense instead of capitalizing. Are you together? And incorporation is the cost that will incur to form the company. So there is nothing to do with the partnership. Then on the same point, you are told that. And also 7 million of goodwill. So decided to write off the incorporation expenses and also 7 million of goodwill. So also there is goodwill written off an amount of 7. So it will be a proportion of, yeah. Remember, I have been told that goodwill arose as a result of business purchase. So what will happen? How much is the goodwill? 20? 27. Now that 27 is a goodwill on conversion. And that goodwill, the partners will share it as a gain. Are you together? But the company will capitalize as an uncurrent asset. Then, since was the goodwill at the date of conversion, for the remaining 6 months, they decided to write off an amount of 7. So how much will be the goodwill to the balance sheet? 20, as simple as that. Then another expense we have, depreciation, correct. Yes, we have depreciation for the year, for the motor vehicle, furniture and fittings. So this is 24. 24. You get an amount of 48. And then for the furniture and fittings, we have 600 to 40. You get an amount of 800. Then there is something we have not yet captured. It's not in the trial balance. Can you see the loan from Debenture? Yes. Can you see in bracket? What is it indicated? 10% interest. So if that interest is not in the trial balance, that means has not been paid, but you are supposed to account for it. So there is loan interest. So you will take 10%, and the loan value was an amount of 12,000, so that you get the interest per annum. But it was decided upon conversion to be converted into what? To shares, for those who remember. So that means we only compute the interest for the first 6 months, 6 over 12. We get an amount of 600. There is salaries. Partner salaries. Note number 1. In note number 1, you do that the partners were sharing profit and losses equally after allowing for annual salaries of 3 million for Abel and 2.2 million for each for Benta and Charity. So it will be an amount of 3 million, then 22 for each. You get an amount of, then times 6 over. Remember that was the annual salary. Are you together? Payable to partners. There were partnership, and there were partners for only 6 months. You get an amount of 3,700. And that was the annual salary for partners. But after 6 months, they converted. So what we have done, we have computed only the salary for the 6 months. And then there is director salary. Once they converted, now they became the directors. Let's go to note number 5. Note number 5. In note number 5, we are told that salary drawings were made evenly. So that means during the year. For the 6 months, is 6 over 12, 6 over 12. Salaries drawings were made evenly. Drawings made after incorporation were to be treated as directors' salary. Remember, you see that drawings can only happen to a partnership or a sole proprietorship. In company, there is no drawings. They wait for the company to make the profit, they get the dividend. And that's why I told that, we do that point again. Number 5. Salary drawings were made evenly. Drawings made after incorporation were to be treated as director salary. So the drawings for the remaining 6 months to be director salary. And now let's go to the trial balance. Can you see the drawings? Yes. Drawings for Abel was an amount of 2,000, right? The other one is an amount of 12. The other one is an amount of, but that were annual drawings. So we just need for the 6 months. Drawings after conversion for the 6 months. You get an amount of 2,200. Now give me the profit or loss. I think I've captured everything. Sorry? Where is number? You are looking at number 5. Number 2. That one is the same. Yes, so they'll still be earning an annual salary of 2.2 and 2.2. But during this year, they treated the bills that made after 6 months to be treated as the director's salary for that year. But from there, they'll be earning the same salary as what they were earning when they were partners. Yes. Which one? Total? 18 for 60. And then 12,880. How much for ABC? Sorry? 5580. 55. Good. Number B of the question. Calculation showing the value of share to be issued to each partner. Calculation showing the value of shares to be issued. So how will we start? See, the question is very simple, but number one, you have to understand the question. I will andika in bracket. Partners capital account. I told you that to understand this thing, you just need to do practice. Because for now, you can wonder, what are they asking? But they're asking, the question is very simple. That one is simply prepare the partners capital account so that if you take their gross claim, you deduct the drawings, you're able to determine the purchase consideration. Are you together? And that's what we are told. Can you go back to note number 2, the last bullet? Shares are to be issued to each partner at par in respect of the amount of their equity holding as at 30th of November 20 at the rate of conversion based on their holdings. So now the question was number B, calculation showing the value of share to be issued. So first of all, you determine their worth at the date of conversion. So ABC. How do you prepare the partners capital account? Yeah, we start with it. Yeah, capital balance brought. What is that one you have? A is an amount of 32. We have an amount of 16. And we have an amount of 10. And then there is the current account. That's their wealth. 2,000 for A, B 2,000. But for C on the debit side, yes, so there is current account on the debit. Now that means he's taking more from the partnership business than what is contributing to that entity. That's what we mean by having a debit. Then they made a profit. Now, this is the profit they made before conversion. They made a profit of 55.80. When they were partners, how are they sharing? Equally. So, profit of 55.80, you divide by 3. 1860, 1860. Then, upon conversion, they revalued their asset at a gain. Revaluation gain. How much was the gain? 12,600. They were sharing equally. 42. Also, the same date, their assets were acquired and they were paid more than the net asset acquired. And the difference between the purchase consideration and the net asset acquired is what? Goodwill. There was goodwill arising. Let's go to note number. You're given note number 2, the second bullet. Now we're told that number 2, the partners agreed on the following condition for conversion. Number 1 was all about the valuation of the asset. Number 2, goodwill to be valued at 27. So now that's the shareholders or the partners' wealth. So for them, they share, but it will be capitalized to the other company. So 27, they share equally an amount of 999. Also, they were entitled to salaries. Oh, there was goodwill written off. No, written off. Not them. Are you together? Now, when we say that the goodwill was written off, in case they had an existing goodwill and it was written off, that's when you debit. Are you together? But this goodwill was at the date of conversion. So they are the one who got a goodwill of 27. But the company capitalized. Then by the end of the year, the company decided to write off. Are you together? Not the partners. So it's the company. See, they are entitled to salaries. They are entitled to salaries. Now we need to determine the salary for the 6 months because they were not paid. And you need note number 1. So that one will increase now the value of the current account. Salaries, interest, all that. The partners were sharing profit and losses equally after allowing for annual salaries of 3 million for Abel and 2.2 each for Debenture. And so Abel is an amount of 1,500, 11, and that was the annual salary. There is another thing. Still at note number 2. Note number 2, the second last bullet. Debenture loan is to be converted into. So that means he will claim that. So Debenture's loan. Yeah, he had given a loan of how much? 12, of which he never received the interest. And that's why he computed the loan interest for the first 6 months before conversion of how much? 6. So that means he had a total claim of 12 plus the interest for the 6 months before it was converted. So there is also loan interest on Debenture. An amount of 600. Are you following? Good. Then we have drawings. Drawings reduces the claims. Can you see the drawings? Abel was an amount of? Yeah, 1,000. Debenture was an amount of? Is it 1 or 2,000? The teacher is always right. So 600. Is that okay? Remember I told that drawings were made evenly throughout the year. Are you together? Of which the drawings after conversion was director's salary. So what we need is the drawing they made when they operated as partners. So we have only taken half. So add the total on the credit. And don't give up, you're almost there. Possible? 26,160, yeah? Okay, deduct 1,600. 24? 560. Sorry? 4B? 760. So 46, 760. Deduct 600, you get 46, 1. A 55. 55, 60. Deduct 1,000, you get 49, 5. Can you add the total balancing figure? Add the total balancing figure. 120? 280, yeah? What is that? That is the purchase consideration, of which you are told that in note number. In note number 2, the last bullet, shares are to be issued to each partner at par in respect of amount of the equity holding as at 30th of November 2019. So it's the purchase consideration which was paid in terms of what? Equity. That's number C. Statement of financial position for Ambere Limited. So let's take a screenshot. Uh-huh. Now this one is an amount of, sorry? 49,960. 47. 47,160. Now add the total. $121. 48. So now can take a screenshot. So now let's answer part C. Part C, you have to prepare the statement of financial position for Umbrella Limited. So I start with the assets, non-current assets. And note number 2, we have some assets that we revalued. So assets are to be revalued as follows. So we have the freehold property, of which was revalued to an amount of 54. And then we have furnitures and fittings, which was revalued to an amount of. Then 6 months to end of the year, right? So how much was the depreciation for the company? It's not in your question paper. Just look at your screenshot. You have taken the screenshot. They're working for the depreciation. Actually, they are here. Furniture and fittings. 240, right? 240. So you get an amount of 45, 60. And then we have the motor vehicle. Motor vehicle was revalued to 24,000. And then you deduct, because it was at the date of conversion, you deduct the depreciation for the remaining 6 months, an amount of 24. So how much is the net book value? 21,600. And then there was goodwill, 27 million, but they wrote off an amount of, so therefore the goodwill will be an amount of 20. And then we have the current assets. For the current assets, they were not revalued, so that means they were taken at book value. I can see we have inventory. Inventory as at 31st of May 2020 is an amount of 28,800. And then I can see trade receivable. Can you see the trade receivables? Yeah, an amount of 18,000. Then there is prepayments and accrual. What qualifies to be an asset there? Prepayments. An amount of 1,000. So give me the total assets. Correct? 960. Then equity and liability, we have the ordinary share capital. How much is the ordinary share capital? 121. Just look from your partner's capital account, the total. What's for it? and 21,480. Then you add the retained earnings or retained profits. So it was converted 6 months to the end of the year. Now, the profit for the partnership they shared, but the one for the company, that one becomes the retained earnings, 11,680. Then we have liabilities. For liabilities, we didn't have an current liability because the loan was converted into ordinary share. So for the current liabilities, I can see we have trade payables. Trade payable is an amount of 12,200. Also, there is accruals. Can you see the accruals? Accruals is an amount of 600. Also, we have a bank balance on the credit side. That is the bank overdraft, which is an amount of 2,000. So try to harmonize that. 147? Nice. So now you can copy.